The US economy is headed toward a recession. But does that mean home prices in America will fall in 2022? Gas has increased, food prices are soaring, even electricity costs are rising. Inflation is really around 10+% once you factor in lagging indicators such as rent. And everyone is to blame for this. Everyone. The left, the right, everyone is to blame for this, but that's a topic for a whole other video. In this video, I have 2 to 3 things I believe you should know and consider implementing so you can insulate yourself as much as possible to come out of the next 12 to 24 months successfully and in a better financial position than you are right now. I say the next 12 to 24 months because I believe this recession that we're about to head into will not end swiftly. I hope it does, but I don't believe it will. Because prior to COVID-19, in late 2018 throughout 2019, we as America were already on shaky footing economically, despite what the person in office were saying about the strongest economy ever. Look, you can't say we have the strongest economy ever, but then pushing the Fed to lower the interest rate. It doesn't work like that. If you're saying we have a very strong economy, that means interest rates should be increasing. But let me get back to the topic we're talking about. Since 2020, I've been telling everyone who would listen that the housing market is not going to crash. I said it wasn't going to crash in 2020, not 2021, not 2022. And I still firmly believe this, and my beliefs are rooted in data and history, not emotion and wishful thinking. So 2 things can be true. We can be headed toward a long recession, but home prices and interest rates can continue to rise for the rest of 2022. Too many of us Americans say we are seeking information, but in actuality, what we're seeking is validation and not information. We want to be made to feel comfortable in our inaction. I get it. We are creatures of comfort and habit. And by listening to crash videos and not buying a home has caused many people to miss out on a once-in-a-generation opportunity. Picture this. Imagine inflation going up 8 to 10% a year. Also, imagine rent prices going up 10 to 20% annually. How much would it hurt your wallets if your rent was $1,000 a month at the beginning of 2020, and now just over 2 years later, you're having to pay $1,400 for that same place? Well, for many Americans, you don't have to imagine that. That's your reality. Let's break it down to its common denominator. You need a place to live. I need a place to live. And we're going to be paying for the place we have to live in. Whether you're making a rental payment or a mortgage payment, you're paying for housing. So can we agree on that? Can we all agree that no matter what, the vast majority of us Americans will be paying monthly for housing? Now, if I told you that in 2020, you could have locked in the same monthly payment for the next 15 to 30 years while also gaining 25 to 30% equity in the process. If you bought a home in the last 2 years, let me know how you feel about that decision. I know not everyone is going to have a pleasant experience, but please share your thoughts in the comment section. Also, I want to hear from you in the comment section if you already had a home, but refinanced that property in the past 2 years and took advantage of these historically low interest rates, and in the process lowered your monthly housing payment. In the comment section, please let us know how that went for you and if you're glad that you own real estate. This is why I personally get frustrated by the people who have been validating your fear and telling you that you should not buy and that you should rent. They've been discouraging you and dissuading you from buying in 2020, 2021, and 2022. But when you peel back the curtain, that same person has been helping investors buy properties during this time. Check this out. They're telling you, the average consumer, not to buy and that it's going to be a housing crash. Yet they're helping investors buy homes right now. You know, those investors who are landlords that are raising rent prices on you. He's helping them buy while telling you not to buy. Let that sink in. Again, we as Americans say we want information, but in actuality, we seek validation instead of information. So let's get back to talking about inflation, the oncoming recession, and what you can do to protect yourself. When wondering what you should do regarding your finances in an inflationary environment with strong indicators of a recession, I believe there are 3 principles you need to remember, and depending on how you want to implement those principles, you have 2 strategies you should think about putting into place separately and or concurrently. Those principles are, number 1, take care of home first. Lock in your housing expense. The biggest expense for most Americans is housing. So most people, when I say lock in your housing expense, that means buying a home sooner than later. Because in today's environment, interest rates are increasing and so is pricing. And interest rates are going to continue to increase for the next 6 Fed meetings. So you should buy sooner than later. But if you're not buying, lock yourself into a long-term rental agreement. I mean 2 to 3 years at a fixed price. Now, after you've taken care of home and locked in your housing expense, the second principle is to save. Don't spend, save your money. And hopefully you've been saving your money for the last 2.5 years when the government has been treating Americans like guests on the Oprah show. You get free money, you get free money, you get free money. The American government has literally been just giving away money. After you've locked your housing expenses, save your money and be ready for opportunities, because there will be opportunities to buy. Because when the interest rates go up, it will cause a lot of people to bow out of the housing market. Now, yes, I'm not saying it will not be competitive. Demand will still outpace supply, but we know people. We know that 90% of home buyers are going to go after that new construction home or homes that are all fixed up and picture perfect. Well, this is where there will be an opportunity for you to take advantage of those sellers with B and C level properties. You know, those properties that may be in an excellent location, but because they need some work, it's been sitting on the market for about 3 weeks to a month without any real action. Well, that's an opportunity for you to slide in and make an offer and take advantage of the seller needing to sell. But you have to remember, not all sellers need to sell, so you might have to be diligent and wait for the right opportunity to come along. That just means making more offers, because you want to find a seller that needs to sell. After a home has been sitting on the market for 3 to 4 weeks, reality will start setting in, and that seller will begin to realize that they waited too long to put their home on the market, and they aren't able to capitalize on the boom that has been taking place the last 2.5 years. And you, the buyer, will be able to take advantage. You can present the seller a very buyer-friendly offer and potentially get it accepted. Save up your money and be ready to find a deal. During a recession, opportunities will be plentiful. And that's when you can get creative with your financing. And if you have cash at hand, you can attract and entice sellers that need to sell. We'll talk more about being creative in the future, so subscribe to the channel if you want to learn more about money or real estate. Warren Buffett once said, "Be fearful when others are greedy, and greedy when others are fearful." During a recession, everyone retreats. But life still happens. People still get divorced. People still need to sell. People relocate due to jobs. Unfortunately, people die. And if history repeats itself, which it typically does, the majority of the people who are waiting for a housing crash won't be able to recognize the opportunity right in front of them because they are fearful and they're expecting a 25 to 30% decline in prices, which I don't think is going to happen. And even if those people do recognize the opportunity, their credit scores or debt to income ratio won't allow them to take advantage of it. That is when you buy, and in the words of Warren Buffett, be greedy and buy, but only buy great deals and excellent opportunities. The next 12 to 24 months will be very interesting, and it will highlight the severe disparities between the haves and the have-nots. And this is why I have been and will continue to encourage home ownership. Did you know that homeowners have 40 times more net worth than renters? For the past 2 to 3 years, too many people have been trying to time the market, and they don't realize that true wealth is obtained by time in the market. Because, as we established earlier, you are going to have to make a monthly housing payment anyway. But the disparities that will become prevalent in the next 12 to 24 months will be this. Upper middle class earners who kept their debts low will be able to buy homes in the 600,000 plus price point, while those who are able to qualify for a mortgage for homes between 200,000 and 500,000 will be relegated to renting. Why? Because in an inflationary environment, investors who were once in the stock market will turn to putting their money in real estate. Have you ever wondered why all of these investors are buying thousands and thousands of homes? And why you see entire new construction communities, single family homes nonetheless, being built by investors to rent all the houses out? That's because historically, real estate in the United States has served as a hedge against inflation. So my advice to you is to follow the money. Do what the smart money and big money is doing. They are buying real estate right now, even when the talking heads are telling you not to.
Talk to me nice.